If you want to lower your tax bill legally, do not open a holding company in Paraguay because it doesn't make sense. By now, I'm sure you will have seen countless videos talking about complex holding structures, offshore company setups, and tax residencies in countries such as Paraguay. After a while, it all starts to blur together, and judging the number of messages we receive on this topic, that's exactly where people get confused. So today we're going to tackle a slightly more basic topic about taxation in Paraguay. If from your home country you open a company in Paraguay and start invoicing through this Paraguayan company your clients, do you pay less tax? And if you set up a holding company in Paraguay to own other companies you already own in other countries, do you pay less tax? The answer is no. Now I'll explain why, and then I'll explain what you can do instead to improve your tax situation thanks to Paraguay in the correct way. So, why doesn't forming an offshore company and invoicing from Paraguay work? First of all, because every country in the world has rules on permanent establishments. This means that if you form a company in country A but work from country B, the tax authority in country B will ask you to pay taxes on everything that gets produced there. So, if I form a company in Paraguay but I carry out my work from Spain, Spain will tell me that I must pay Spanish taxes on everything my company produces in Spain. In some countries, invoicing through a company located in a low-tax jurisdiction where there are no real operations, it's even a crime. In some cases it is tax evasion, in others it is considered tax fraud. And in those cases, in countries like Russia and Germany, this can even lead to prison time. Even in Paraguay, as we've explained in other videos, these rules exist. Even if someone operates through their business such as a US LLC and they carry out work here in Paraguay, then they also must be taxed in Paraguay, at least theoretically. Then Paraguay manages this a little differently with banking systems instead of tax audits. Now, whether you're forming a simple company or a holding company that owns other companies, the situation does not change. If you form a single company in Paraguay but work in another country, you will have a permanent establishment in that country and therefore you will have to pay taxes there. If instead you form a holding company in Paraguay that owns companies abroad, each one located in the country where it operates, you will pay taxes in the country where each company operates. And then you will bring into Paraguayan holding only the profits that have already been taxed by other countries. After that, you will have to pay an additional 10% in Paraguay on the profits that the holding receives from the companies it owns. So in short, a big and complicated tax scheme to end up paying more than you're already paying. There is also another factor to consider, which is the personal one. If you decide to form a company in Paraguay, but your tax residency is in another country, in that country you will also have to pay taxes on the dividends or salary you pay to yourself as a person from the Paraguayan company. In essence, you are not benefiting at all, neither from a corporate nor a personal point of view. For those who are immersed in the world of taxation, these concepts are surely almost trivial and nothing new. But for those who are just starting to approach the topic and have more beginner-level doubts, it's also right to explain how Paraguayan taxation is actually used to get meaningful tax benefits in the right way. So the first thing to know is that Paraguay is not a country to move your business to, but rather it's a country where you want to move your personal tax residence. So the benefits are on the individual, while the business is generally set up elsewhere, and I'll shortly explain where and how. A person who has tax residence in Paraguay enjoys three major advantages. The first is that, unlike other countries, you do not need to physically reside in Paraguay for a certain period of time each year in order to be considered the full tax resident. You can live in Paraguay or live elsewhere as long as no other country considers you its tax resident. Otherwise, you will have to pay taxes there as well. So, in our example, if someone is from Spain, the correct thing to do is to move their tax residency to Paraguay and then live wherever they want, as long as they don't spend more than 180 days per year in any other country. There are also small considerations, such as owning property, having a spouse or dependent children, but those are more advanced topics that you can address in a free call with our team. Simplifying things a little bit now, you can travel as much as you like, or rotate between 3 or 4 countries every year and still be considered a full tax resident of Paraguay only. This is something extremely unique that countries like Panama, Dubai or Thailand do not offer. The second major advantage of Paraguay is that income produced abroad is completely tax exempt. So if you're not in Paraguay while you're performing a certain job, that is not taxed. The same applies to capital gains that come from capital held abroad, investment income not related to Paraguayan shares or real estate, and cryptocurrencies. So you can work and invest tax-free while traveling the world and only pay 10% tax when you are working from Paraguay. But once you consider all deductions and tax credits, in practice you never end up paying 10%. You generally end up paying less than 1% even on income produced locally. The third major advantage is that you can continue to operate your business internationally without problems whatsoever, with minimal costs and by opening bank accounts wherever you want. In fact, you can set your tax residence in Paraguay, transparently invoice your clients through a US LLC, a Hong Kong Ltd, or other legal structures that lawfully allow you to pay zero tax on profits if the work is not carried out in those countries. You can have your US LLC, invoice your clients, get paid into an international bank account, and enjoy the fact that your company's profits will not be taxed at all. If you perform the work from Paraguay, you will pay 10% net of your expenses, so as we were saying before, generally close to 1%, while if you perform the work from outside of Paraguay, you won't pay a single penny of taxes to Paraguay. Because, as we said, foreign-sourced income is not taxed here. In this way, you can legally and transparently achieve a complete, secure setup, supported by all the necessary documents: tax compliance certificates, tax residency certificate, tax returns, and so on. Of course, the issue is having to leave home. If you continue to live in your country of origin for more than 6 months a year, that country will still consider you a tax resident. No matter what you do in Paraguay, you will still have to pay taxes there. But obviously, that's how it works. If anyone could just open a company in Paraguay and suddenly start paying zero tax while continuing to live in their home country, everyone would do it. So remember, Paraguay is not the right country to incorporate an offshore company, but it is the right country to move your tax residence to and enjoy the advantages that today no other country can offer in terms of requirements, minimum presence, and clarity of the rules. So, from Asunción, that's all for today.